Hello everyone. In this video, we are going to explain how to construct a cash budget. Let's take this example. Terra Corporation is preparing its cash budget. Its financial planner has forecasted sales revenues and purchases as shown in the following table. So we have here different months, April, May, June, and July, and the forecasted sales for these months, and the forecasted purchases for these months. Let's go to the cash budget. The first row of the cash budget is concerned with the different months. So April, May, June, July, as given by the exercise. The second row is concerned with the sales. So all what we have to do is to copy these amounts in here. So during April, the sales are 500, May 620, June 680, and finally July 730. As indicated in here, these amounts are given. Let's see the third row, which is concerned with the collection. So let's read this sentence. The past experience has shown that the firm collects 60% of its sales immediately during the same months. So 60% of the 500 are collected during the same month, so in April. However, the remaining 40% are collected 1 month after the sale, so they will be collected during May. So let's write in here, same month, 60%, and after 1 month, 40%. So in this case, 0.6 times the 500 will be collected in April, and the remaining 200 will be collected after 1 month, so in May. So it's equal to 0.4 times the 500. Regarding the months of May, also 0.6 times the 620, and here 0.4 times the 620, because the 40% are collected after 1 month. Regarding June, 0.6 times 680, and after 1 month, 0.4 times the 680. Regarding July, 0.6 times the 730. The remaining 40% would not appear in this table because we do not have the column of August. So this is the collection part. These cases would vary regarding the exercise. Sometimes they say that 50% are collected during the same months, and 50% are collected after 1 month, and so on. This depends on the situation and the exercise. So here we have in this row the total collection. So the total collection during every month, it is the summation of the collections. So it will be equal to the 300 plus 0, and so on for every month. Here you can see C4 plus C5, D4, D5, and E4, E5. So this is regarding the collection and the total collection. Let's move to the purchases. Here the purchases will be also given. So we have to move these or copy these amounts to the table. During April, the sum of purchases is equal to 300, May 350, June 400, and July 450. Let's see how we will pay for these purchases to our suppliers. let's read this sentence. 25% of the purchases is paid in the same month, so immediately. So 25% of the 300 will be paid during April, and the remaining 75 is collected 2 months after the purchase, so after 2 months. Let's put in here same month, 25%, and after 2 months, the remaining 75%. So during April, we will pay 0.25 times the amount of purchases in April. The remaining amount will be paid after 2 months, so April, May, June. So in June, 0.75 times the amount of purchases in April. Now regarding May, 0.25 times the amount of purchases in May, the remaining 75 after 2 months, so in May, June, July. So 0.75 times the amount of purchases in May. Regarding June, 0.25 times the 400. After 2 months, we don't have the column of August, so we don't put it. Also, the same thing for July, so 0.25 times the 450. Also, these two rows may vary according to the exercise. We have also some other payments like the wages and benefits that are equal to 120 million per month. So we should also add the wages in here. These usually are constant and given. So every month we should add 120, 120, 120. Now we have the annual depreciation. Depreciation is never included in this table. So do not include depreciation in the cash budget, even if it is given. The other expenses, we have the office space, 20 million per month, so we should add it in here, office space, 20 million, 20 million, 20 million every month, so also constant and given. And finally, we have the lease expense, which is 32 million per month, so 32, 32, 32, and 32. Now we will see the total payments. The total payment, it is a summation of all these payments for every month. So it will be equal to sum all of these payments sum and finally for the last column sum. Okay, so now we will calculate the net cash flow, which is, as written in here, total collection minus the total payments. So total collection minus the total payment equal total collection minus total payments for every month. Okay, so this is the net cash flow during April. Let's talk about the beginning cash balance. Let's read this statement, the last statement in the exercise. The beginning cash balance on May 1st will be 40 million. So at the beginning of May, the cash balance was 40 million. So we have to write here in May the 40 million. Okay, so at the beginning of May, we had 40 million. And during the month of May, we have added to these 40 millions the 312.5 millions. So at the beginning of June, how much, what is the cash balance? So it will be equal to the net cash flow of May plus the beginning cash balance of May. So we will start June having $352.5 million, and we will add to these 352 159. So at the beginning of July we will have the summation of these two, net cash flow plus the beginning cash balance. Okay, so regarding the beginning cash balance, the first one will always be given by the exercise. You will see in which month it is given. So it is in May, so we should put it in here in the column of May, and so on. Regarding the other the remaining months, all what we have to do is to sum the beginning cash balance with the net cash flow, and we will get the result. Now regarding the cumulative cash balance, all what we have to do is to do the summation of this one plus this one equal to this one plus this one, and finally the amount plus 163. So as you can see in here, it is the summation of these, of the net cash flow plus the beginning cash balance, and it is the same of the beginning cash balance of June. And in here, it is the summation of the cumulative cash balance plus the net cash flow. And finally, in here, it is the summation of the cumulative cash balance plus the net cash flow of July. Finally, regarding the minimum cash balance, it will be also given. Let's read the last note, or the note in here. Note that the company wishes to maintain a minimum cash balance of 300 million each month. So we should write in here 300, 300, 300. Finally, we will see if the company has a surplus or a deficit of cash. So the company wishes to maintain a minimum cash balance of 300, and it has a cash balance of 352.5. As a result, it has a surplus. So here's the formula: cumulative cash balance minus the minimum cash balance. So equal cumulative cash balance minus the minimum cash balance. So it has a surplus of 52.5 million. In here, cumulative cash balance minus the minimum cash balance, so it is positive, also a surplus. Finally, the last one, cumulative cash balance minus the minimum cash balance, it is also a surplus. If the number was negative, so it will be a deficit.